All right, very good. Everybody, welcome to another edition of the Trading Studio. Today, Thursday, May the 12th. Got Steve Gomez here with me as always. Got some pretty good content lined up for you guys, but before we get rolling, we all know that we have to do the lawyer speak really quick here. So I just want to make sure everybody out there is aware of the fact that we here at Trade Ideas are simply a publisher of information, and please do not take what we share with you here today as a solicitation to buy or sell securities. This is all presented to you guys for educational purposes, so if you do need the services of a registered investment advisor, please seek out that person, and just know that everything here today is educational in nature. All right, moving right along here, I just feel it very kind of important to kind of get this slide out of the way right off the bat here, because simplicity is really what it's all about. And, you know, here's Einstein, one of his most famous quotes: if you can't explain it simply, you don't understand it well enough. And boy, those words ring very true. I mean, you could apply that to just about anything in your life, which is what I try to do. But, you know, when it comes to the trading world, what better paradigm to stick with? And the way that we help you guys achieve simplicity in your trading routine is through the Holly Trinity, which of course we will go into step-by-step detailed analysis of how to use the Trinity effectively. So as always, Steve, I think it's time for a little market recap, because the old S&P is getting up to the top and forming this range here. And there we have it.
There we have it. Yeah, let's expand that as much as we possibly can. Why not? And
expand or contract?
No, you're good. No, you're good right there. That's good right there. And you could probably put another horizontal line right across that 210 level.
Absolutely.
And this is our playground, ladies and gentlemen. This is where it's all happening. You can see the bidders that step in down there at the lower end of that congestion area. He's got that the line just below that wick. You could have two schools of thought. You could even move it up to the other ones as well, which would correspond with last Friday's big bounce on the green candle there. But that's the playing field that we're in right now. And until we break out of either one of those directions, you really should not have a prediction on where the market's going. There's no basis in fact or anything there to give you license to say, I think we're going above that orange line or we're going below that orange line. I can tell you right now, I do have a bit of a bias. My bias is a bit of weakness, but that's basically because of some of the alerts I'm seeing more on the downside than the upside. I'm also seeing Holly starting to at least bring in a few more shorts into the mix. But I was working with somebody this morning. I think he's even here. What's up, Damien? The market was at lows this morning, and I was telling Damien, it just could be quite possible we could just bounce right back up and right back up into the range, and that's exactly what we did, and that's what we've been doing. There's a lot of days in the last week where you can see we could have closed on lows, but the bidders stepped back in and pushed it back higher. So that even crosses with the bias that I'm starting to develop of a little bit of weakness in some of the other things I'm seeing. So there's a lot of mixed signals right now. I have, as well as Jamie, have cleared out my monthly price alerts charts because I don't think it's healthy to let it just sit in there and get stagnant. I think you need to always be aware of what's working, what's not working, and so I'm trying to move forward in May with a new price alert and putting on a few more shorts, by the way. Matter of fact, some of those shorts were highlighted in last night's webinar. Maybe just pull up a couple here real quick.
Yes.
Was JEC was one of them, and JEC is following through nicely on that particular setup. Really liking the way that one's working. Also Hain, H-I-I-N, another one. So what I'm saying is on my price alerts, I'm noticing that the shorts are actually outperforming the longs a little bit. And so, again, there's a bit of a reason for a possible bias. But going back to the spiders, throw the spiders back up there. The way those buyers stepped back in today, it's really making it hard to figure out which way we're going. But we're not. Our job is not to predict which orange line is going to break through on the upside or the downside. Our job is to just react, and most importantly, have an open mind. If you don't have an open mind, you're a closed-minded fool like Bill Ackman, who's fighting VRX and fighting HLF, both of which are just laughable positions for somebody in his stature to be able to be calling themselves a fund manager. I can only imagine the amount of redemptions they're getting. But the point is, Bill Ackman has become the poster boy for not having an open mind. You can be wrong. Things can change. I mean, if Dan was in here right now, he would laugh. Jamie doesn't remember, but way back in the day, and I'll bring this up again later, Dan was my first contact into this whole industry, and he was kind of my original mentor and trading educator. And we had a guy in our group named Joe. L is his last initial, but Joe L was an attorney. Now, I've got a lot of attorney friends, and I think they have some interesting quirks, but being an attorney, you are trained to argue one side and that side only. To hell with the other side. So that poor guy, Joe Lavelle, was the worst trader I'd ever seen in my life. That poor guy had absolutely 100% conviction no matter what he was doing, and most of the time it was wrong, and he was unable to change his mind. And I felt bad for the guy because that was his makeup. That's how he was trained. He was an attorney. But we as traders have to have an open mind, and right now your mind has to be incredibly open with where we are in this range. There's, like I said, there's some hints that are showing some weakness, but there's also hints like today's buy up back at the close, creating that downside wick that just keep us churning in these levels. So that's what I see. I don't really know which way we're going to go. We'll more know definitively when the footprints in the sand of this herd mentality decides to tip its hand. But until then, the buyers keep stepping in down there at 203.5, and the sellers keep stepping in at 209.70 roughly. So that's where we are.
Yes, and I couldn't agree more with you, Steve. I have a similar story. Back when I first started trading in '96, actually the office that Dan and I met in back in Austin, Texas, there was another guy in our office just like the guy that you described, except this guy's name was Pete. And he was dead set on shorting this stock back in the day, Cascade Communications, because guess what? Their fundamentals were all messed up. Well, he was right. But, you had to sit a 80-point wiggle to the upside on a 1,000-share position. So, yeah, Pete, in the end, I think the guy ended up losing 10 on the trade after he sat there and it sucked the life out of him, right? But he was right.
The opportunity cost out of him as well.
Yeah, it sucked the life out of him. It sucked the opportunity cost out of him. Basically, just kind of wrecked everything. But that just goes to show you the danger of coming in with preconceived notions. Whether it's on a company or on a day of trading, coming in with a preconceived notion is a horrible thing. Now, if you come in with a plan, that's a completely different animal. But see, a lot of people, especially when they're new, they get preconceived notions and well-thought-out plans confused, right? So brings up a very good point about coming into the day with preconceived notions. Very bad thing. All we want to do is assimilate the information that's being presented to us on this day and then react accordingly based on our plan. And the plan that we use is the Holly Trinity, right? So before we get into the Holly trades today, a couple of little things I'd like to bring up from yesterday's activity. And, we always talk about trade arounds. In the trades that Holly makes. Some of them go immediately. Some of them present what we call trade around opportunities. But, I've kind of been thinking about a new thing here lately, Steve and I were discussing, and it's what I like to call a carryover. So before we get into the Holly trades for today, let's talk about a couple of different carryovers. One came from Holly, and it was a long trade on this little stock right here. And let me expand my intraday here so we can see yesterday. So I can't remember exactly what time it was, but I want to say, here's yesterday's activity on the 5-minute bars. Let me stretch them out just a little bit so everybody can see. So I believe the long call came from Holly about somewhere in this area right here. Needless to say, the trade got stopped out. But once you see that trade stop out and you see this little pattern forming here, it doesn't take a whole lot of imagination to go, okay, if this thing really does have hardcore selling in it for the day, and from the footprints of this one, it looks like it was, not just selling with, one direction or the other, but this is always a pretty indicative of institutional selling. It's just steady, steady, steady. Of course, it's going to take a little bounce, but the thing continued. So once again, like I always say, if you can draw a horizontal line, you're halfway there. So if we drew a line straight across from there, when this range break occurred later in the day with some volume, boom, it was a good trade. Now today, the carryover. Hey, Mac was extremely weak yesterday, so therefore it's going to be on my list of stocks to keep an eye on for today. And now we're looking at today's action. So once again, patterns repeat themselves. We're just looking at more or less an intraday pattern, very similar, the same type of animal as what we look for in our daily setups, but on an intraday basis. Typically, it's simply breaking out of a little range or a base. So once again, we draw the line straight across. Another great opportunity today from Mac from yesterday. So simple, but effective. We're not rewriting the trading history books here. Hey, something looked really weak yesterday. Maybe you capitalized on it from the Holly stop out, maybe you didn't. But carry that information over today because, as you can see, presented some really good short side opportunity today. And of course, we can always take a look at what's happening on the daily. And we're starting to see, these bearish engulfings, right? How many days of gains got wiped out in 2 days? 1, 2, 3, 4, 5. Most of them got taken out yesterday. When we see this, we're like, whoa, is it going to stop here? Well, now, look, magical stopping point. Is it going to bounce for tomorrow? Maybe, maybe not. Now my interest is waning because it's getting too stretched out. But just keep that in mind. If Holly points you to a stock, and whether you capitalize on it that day or not, take a look at it on the charts for the next day because sometimes those carryovers can pull some alpha for you. Now,
I'm just trying to read Mike C's question. Could volume exhaustion have been conducted on Mac for a long? Is there a case to be made? I'll tell you what, I'll keep that chart up. Go ahead and keep that chart back up. I would keep it as simple as possible for this one. I'm sorry, the daily is what I meant. You had the daily there for a second.
There we go. Mm-hmm.
Oh, no, there was something else that you were looking at. There was another stock. Did you type another stock in there? I'm so sorry.
Oh, yeah, just now I was going to switch over to DKS.
Yeah, you said on the daily. Yeah. I saw the daily on that one, and I said, well, that little doji there is a pretty simple strategy. You can bracket those dojis, and I'm deviating from Mike's question, but while we're on the subject here, yeah, that Dix is very interesting. That could be the beginnings of a go, pause, go. When I see charts like that, whether it's the upside or the downside, you put a bracket on that little narrow range day like we had today, and odds are it's usually a good continuation pattern. If it breaks either direction, that's kind of a real pivot little candle there. But going back to Mac, I wasn't really paying attention to the volume exhaustion. If anything, it looked like the volume was picking up towards the end of the day on Mac. On those kind of trades, I think we just want to keep with what Holly had brought to our attention, which was downside. And once that trade is over, going the other direction is just probably, going back to a complete discretionary type mode. So what Jamie was trying to imply there was that, this again was a Holly trade fresh out of the hopper and had some follow through to it if you're able to trade around and notice some interesting areas. Which is a great point. We were talking, Dan and I and Jamie earlier about, the Holly trades, and we'll get into this more. The idea generation is where it all is, and if we get stopped out too soon or something happens where it doesn't work out in the first hour, well, don't crunkle that trade up and throw it in the trash. Keep it, and we'll talk about how to use the exit non-exit column and using price alerts, the Holly Trinity, to continue to work that trade for the same day, because we're noticing, and again, this is a very young technology, but one of the things we're noticing is there's some great trade arounds if you just continue to keep it simple and use the price alerts. If the timing was a bit off on a Holly trade, well, it's still the same day, it's still the same trade. There's no reason to throw it away. Keep your eye out for 2.0 for a chance to jump back in, because today, if you lift that chart there and click on the Holly, the non-exit profit had a pretty good day. It was the exit profit that got us stopped out, and we had to take the hickeys on those. But once again, if you're setting the proper price alerts, those trades can go all day long. And additionally, like Jamie just said, the carryover trade on this one had enough momentum behind it to where there was still some good meat on the bone in the same direction that Holly picked.
Exactly. And, the reason I was bringing up DKS is because even though that was, basically came from, Barry's trading room yesterday, I myself was watching some of the options magic plays come through. I was actually involved in a training session at the time, and I was showing a client the DKS chart, which you can see right here from yesterday. And as we were speaking, this is when the break happened right about the bottom of that wick there. So it was a really good experience, because I'm like, okay, watch what happens to DKS. We're going to short it right here. That break is happening with massive volume, also coming through the options magic window, which means the options were above normal as well. And by the way, Barry, if you're listening and you want to jump in on this one and talk about DKS, by all means, we'd love to have your comments. If you're busy, that's cool too. But this is yet another, not quite a carryover, because once this downturn happened, nice gains, and then what do we do as traders to try to figure out what's going to happen next? Well, we consult the daily. We're like, okay, where's the support, right? And of course, just drawing that line straight across, boom, as soon as it hit that level yesterday, I even probably tweeted about it. I'm like, okay, that leg is done. Now what's going to happen with DKS? Is it going to flatline, bounce, go down further? And you can see today, kind of equal buyers and sellers, not a lot happened. So, just putting our traders' hats on, no big sell action today. We got a little wick through and push back. Potentially, this is the new support level. But the bottom line is capitalizing on these types of plays and then knowing when to leave something alone. See, DKS this morning, I didn't really have a big interest because, we were butting right up against these areas right here. But the MAC, presented that nice, simple little day pattern. Whoosh right here, And once again, these patterns, they're so simple. It doesn't get any simpler than drawing, a horizontal line and waiting for something to break. If the volume's there, it's a good trade. So once again, referring back to our good friend Einstein and the simplicity of this methodology. All right, so now let's go ahead and get into the Holly trades today, because a lot of people had a so-so trading day today, unless you were watching our technology and embracing the methodology that we've been teaching here at these webinars and in our training sessions. So before we cruise on to that, I want to bring up one more slide here. So Steve, MGT, all right?
Yeah, trading room was all over it. If you guys are not in Barry's trading room, and Dan is very active in there as well, and I'll pop in occasionally when I've got time and throw in my 2 cents, but I keep an eye on it. MGT was kicked around yesterday and taken by Dan, and this is just a quick snapshot there of his trade. And a lot of people say, well, this is just day trading. This is just must be for day trading. Well, no, actually, no. It's the discretionary trader's gray box, Holly, or however, I don't know if it was Holly, I can't be for sure, but regardless of, it was a trade ideas type generated event from the room that got everybody excited and got everybody going on this particular stock. And Dan actually did do a screenshot, like I said. Yeah, thank you. That's a good daily chart. So let's take a look at this. Here's today. Boy, there's two things I can say about this, and Damien's going to appreciate this as well. He's listening because we talked about this today. There's two candles in there today. The big green candle from yesterday, which is when the trade was on, and look, it closed at highs. Is there any reason to get out of that trade? Does that look like a day trade? Probably not. There might be some more meat on the bones, and Dan was demonstrating that these are not all day trades. You don't always have to get out. And lo and behold, a nice day of follow-through. Now, what am I laughing about with my friend Damien is that he and I spent about 5 minutes today talking about the type of style I like to look for in swing trading. When the stock finally gets its move, and gets its move, look for about a day and a half, because especially if that first day closes on, I'm counting yesterday as the move, yeah, closing at the top end of that range there, there's probably going to be some follow-through the next day. And a lot of that follow-through will carry over into the morning, and then in the afternoon, or the midday, excuse me, it starts to give some back. So I said, you see this all the time, a nice big green candle, and the secondary candle has a nice big wick on it. So it's my method, my philosophy, my gut feeling when these stocks make their moves like that. You do everything you can to keep your hand off the sell button. Tie it behind your chair if you have to with both hands, because a day and a half is usually, more often than not always, I'm not using complete, language here. I'm trying to use open language, but in my experience, more often than not, that day and a half is a really nice move to try and hold on for. So that's what I noticed about this trade. But getting back to the slide, yes, it's not just a day trading vehicle. You've got to have your discretionary hat on as a trader to say, am I cutting myself short here at getting out of the top of this giant green bar? Is there more on the table? Well, just because Holly got out and has to tie her hands behind her back every day doesn't mean you have to as well. So that's the excitement above the trading room and coming up with these things. And if you can ride them to their fullest extent, more power to you. And Dan had a good trade on that one. And also, you've got just a quick, this kind of stuff is popping up all over us. We've got a few different accounts here at Trade Ideas, myself, Dan, Jamie, and David, and Marissa, and we're all seeing just a real pickup in great feedback and great communication. So this was just yet another example today from a guy who's just addicted to Trade Ideas, and we love seeing this. I'm seeing a couple of comments here in the screen, somebody talking about using Holly's trade around in JW Nordstrom, being a real happy camper for that. Chart Seer Dave, I'm so glad you get it. That is the whole point of this technology. Nobody else is doing this and giving this to you and presenting it to you in such a way that you can trade around and have circulating all matter of key and
Leon.
yeah.
Yes. It's an addiction that you just have to live with. But it's the only addiction that it can actually result in alpha. So, it's not necessarily a bad one. So before we get into the Holly stuff, a couple more things just to point out here. Things to drive home that those of you who attend regularly, they're like, oh my gosh, beating that dead horse again, but that's because it deserves to be beaten. All right, so Holly, what is she? She was never designed to be a black box, and that's what we have to keep driving home. We have to make her exit on a daily basis because that's the only way that we can compare her performance to the SPY. But as we talk about all the time, there is so much alpha hiding between the cracks and between the lines that is not reported in the end-of-day reports or even in the middle of the day. So, Holly is that statistically trader spitting out trades that sits next to you all the time. Now, some of them are going to go immediately, and some of them are not. Every trade that Holly generates is statistically weighted to work. Now, sometimes the timing is a little bit off, right? So, for today, Holly had, what was it, Steve, 11 or 12 trades total?
11 today and 11 yesterday.
Right. So what is that telling us, right? It's telling us that based on the analysis of analyzing close to 1 million trades after today, like for example, Holly's computing right now. She's, we're loading up the database with all today's tick data for every single stock, and then the analysis of the, quantitative combine will begin, and the strategies that score the minimum on the scoring system that we've developed will appear in the hopper for the next day. So when Holly is having light trading days, that tells you something. She is the canary in the coal mine. In other words, light Holly day, well then I better be very selective. There's not an obvious bias one way or the other, so I better be very selective. So Holly, sometimes she gets into a trade and it gets stopped out. Boom, she's taking a bullet for you, right? As Steve and I always like to kind of go back to when we were all in the trading offices back in the SOS days. We capitalized on other people's pain all the time, We were all friends up there, but when everything was said and done, we were there to make money, and if some guy was in a position that we knew was going to go against him, we'd take the other side of it. You know?
Joe L., the attorney, was one of those guys, by the way.
You're right. Yes, and Pete, the Pete character, of course, he wasn't trading very much. He was just so sick all the time watching his cascade that he didn't do much trading. But when he did make a trade, we were always like, should we counter it? But anyway, the bottom line is this. Holly's there every day for you, either taking bullets and showing you, potential alpha, or, you're participating with her and things are just going the way that they should. So, either way, it's valuable information. And so, just to kind of reiterate the Holly Trinity, we use our alert windows and our top list windows to find the action. As Steve likes to say, we look at our charts to find the footprints in the sand, and then we use our limit alert window to make sure that we act on that situation when the time is right. Now, looking at the info in the windows and then looking at the charts to see the footprints, I realize that some of you out there might be new. And even people that have been in the game for a long time, maybe you guys haven't been, the real technical guys. So a lot of the times, people are like, well, what are you seeing in these charts? Which brings up the next slide. What do you see here? Well, if I roll my chair way back across my office here, I can't tell if that's kind of like a moth or it looks like a little gnome dude staring at me.
Looks like the Grinch.
Yeah, the Grinch is in there, And then you could also say, well, it kind of looks like some crows spreading their wings. So everybody's going to see a little bit different of a thing, right? And the same thing applies to charting techniques, right? So let us pop in here and start taking a look at some of these Rorschach charts. All right, so let me just resize things here a little bit. And as we can see, the total hopper today, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 strategies, of which 7 were long and 3 were shorts. Of course, just because a strategy does show up, that doesn't mean it's going to trigger. So these guys didn't trigger anything today. All the action came mainly from support is that U over 20, spit out 6. We had 2 from this guy, 1 here, 1 here, and 1 here. And of course, we can see after everything was said and done, how much did each strategy make or lose. And, cumulatively, Holly was down about $1.11 today after all of those trades. Now, nothing special here. And of course, I always feel it a little to keep you guys up to date here. So, to put everything into perspective here. We busted new highs, and now we're just kind of coiling up just like the S&P does or just like a stock does before it makes its next move. So a little down day, a little up day, a little down day today, but all it takes is one more tick, and then boom, new highs aren't too far away. And then once again, I'd like to reiterate all the information that you're seeing here, all of Holly's activities since inception, and where she is against the S&P. This is all in development phases right now, and we're going to make this stuff available to the users so that anybody can go in here and see how she did on a certain day, go back and look at the trades, have all the drill down information. So that is coming. It's just not ready for prime time yet, but it's in development. Just want to keep everybody apprised of that. And then on the same token, we get a lot of questions about, okay, what is float on looking for? Or I really like power hour short, but what's in the cake batter, what are what's the filter set, what's the alert that's being used, and we're currently working on a document to make all of that information available too. So just want to make everybody aware that that is coming down the pipeline. Okay, so just looking at Holly's overall performance today, mediocre, down $1.11 on a handful of trades. But now let's take a look at the trades today. I love how the simplicity is even coming into effect here, because our non-exit profit column, first let's look at just the closed profits and losses, right? Ooh, we had a 35-cent winner, 24.14, all the rest were losers, right? Now, looking at the non-exit profit column, just about everything that was once a loser ended up the day being a winner on the net non-exit profit. And the quote, my comment about simplicity here is, this isn't rocket science. It's just another way to take information that's always been available to everybody, but we're putting it into a format that actually makes sense. If you had a training session with Steve or myself in the past, when we go to show you a top list, and we're like, yeah, this is just for when you want to view things in a list format, but the real beauty is being able to resort that list of 1,000 stocks with a simple double click, right? Nobody does that except us. So when we look at this non-exit profit column today, wow. So let's just take a couple of examples and go, okay, once we see Holly get into STMP today, let me get my intraday queued back up here, make it a little bit bigger. Okay. All right, so nice big 5-minute candles here. Holly tried to take a long, or she did take a long in STMP right here. And before too long, it gets stopped out. So, obviously, when we're watching Holly take the trade and get stopped out here, obviously this part of the chart has not materialized yet. So in order to keep it very simple, when you're seeing Holly in a losing trade, whether she's stopped out yet or not quite stopped out, but she's red on the trade, the easiest way to manage this is just to simply take the entry price, 6. Create a limit alert for that. Now I've drawn some lines because I was messing around earlier, but let's just go ahead and go through the procedure here. 8306. Obviously it was down from that price, so if it rises to that price, we want to go long again. And we're going to put a nice note here so we know why this alert is coming up. Holly trade around. Now I can't tell if it's stuck or it didn't seem like it went through there. Give me 1 second here. Okay.
Somebody's saying you put in 830.
I made a mistake and user error. My sausage fingers got me on that one.
Thank you all. A couple more people caught that too. Thank you. You guys got
8306. So obviously it's going to auto trigger once I put this back in. So the bottom line is this. Holly gets stopped out. You put in your price limit alert for 8306 right there. Later on in the day, boom, 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 you get your price alert screen flashing at you, and you're aware of it again. Now, whether you immediately jump back into it or you give a little bit of time, because if we give it a little bit of time and then we start to see this little micro consolidation, looks very similar to a 5-minute NR7, which is always indicative of a move one way or the other. Now, at the same time, if we're trying to make ourselves feel nice and warm and fuzzy about re-entering the long, what can we do? We go back and check out our daily. So, hope everybody can see this. Stretch it out just a little bit. But, obviously this being today, if we're thinking about making a re-entry into STMP, we can quickly look here and go, okay, this will give us a little bit of comfort knowing that, unless it penetrates yesterday's lows, I don't have too many reservations about re-entering this trade today. And of course, if you had done that, a 40-cent profit was on the table for you. Because this leads to a good little comment about the nature of Holly. Well, since we have to have Holly back in cash at the end of every day, we've chosen to put her on very small intraday time frames of 60 minutes, 45 minutes, some are 2 hours. There's a few strategies in here that'll go to the close if conditions are right, because there are stocks that are trending. So, we could have easily said we're going to make everything hold into the day, but you want to see things really get crazy, that's probably not the best way to do it. It's better to go with short-term hold times so that we can match Holly's performance to something like the S&P, and then have this column to show us what would have happened or what could happen. So ST&P is a simple example, and then of course ANSS. Once again, long entry right here, the price 86.16. So we can see, of course, Holly always puts an arrow and then puts it over here.
It's all mapped out.
So really all we could do is just, I'm drawing lines right now because if I set price limit alerts, they're just going to auto trigger. But everybody gets the gist here, right? Okay, Holly got stopped out. Forget about it. Set your limit alert. That's all you have to do. That's the simplicity here of the Holly Trinity. Holly got stopped out. I'm going to put price limit alert. If it rises back up to that entry price, boom, see if it's worth taking. If we need a little comfort to figure out, if this is a good deal, we can go consult our daily once again.
And for those of you that are in the live trading with Barry, this has been what he's been working on a lot. He's been adding this to his repertoire of trading, and he loves it. And he's demonstrating it very well, that keeping his eye on that non-exit profit throughout the day, just simply watching it go from red back to green and then assessing the opportunity cost, or like Jamie's doing, bringing it up to you in a price alert so you definitely don't miss it. There's a lot of value there. There's a lot of value there.
Yet one more, MDT. Entry price was 81.01 as we see over here, and just more of the same. And this is repeating itself not out of coincidence, not out of chance, simply because we're reinventing the way people view data. In the old paradigm, what I like to refer to as the old paradigm, hey, Bob, I've got a system. Okay, well, what was your system, up or down at the end of the day? And that's how they grade it. Well, I was down, I was down, I was down. Well, here we have a methodology with some very high-end technology that, obviously we like to see Holly finishing the day green. But as we all know, that's not possible every day. Maybe it is for short periods of time. But overall, with Holly and her performance on the daily P&L being green or red, all we really care about is how green it is at the end of the month. This is a cumulative effort. But today Holly was down. But the quality of the information that's being presented to you, me, and everybody else that's watching this is of such a nature that just because Holly was down does not mean that you, the human, could not interact on these trades and come out positive. Myself and Dan and Steve and Brad, we all have experience with trading data sets like this in an automated fashion. And one of the takeaways here is that when we were doing that a lot, hot and heavy, when the market was conducive for that type of activity, it was always a game. Hey, did you hurt the performance today, or did you help it, right? Did you stick to the hold times, or did you use some discretion, right? Well, see, this is all happening. This is all like pre-trade stuff. Okay, Holly made the entry. It's going against her. Let me go back to my methodology. Let me set my price limit alert. Boom, boom, boom. It's simple. Next thing you know, you've got 3 or 4 or 5 or 6 of these trade arounds working. You're getting signals. You're making entries, and you're seeing how this all unfolds. So, it's about repetition. It's about using the Trinity, and it's about keeping it extremely simple. And, guys, it just doesn't get any simpler than this. What are we doing? We're watching our windows, we're drawing some lines, and we're setting some price limit alerts. And then when those things trigger, we're acting on them.
And yeah, ultimately it comes down to you to take that trigger and take that trade without sitting there and trying to run it through your paradigm and your prism. Well, if it does this or if it does that. Or
Steve, tell them about what Dan was telling you when you first started trading.
Yeah, you got it. I was heading there about a sentence away. In '98, like I mentioned earlier, Dan really was my entree into this whole craziness, and got me addicted ever since. But I recall one day I was playing Dell or something that was just crazy back in the day, like $170 stock and moving in quarters and eighths and back and forth, and on 1,000 shares, that was just really adding up and taking away quickly. But Dan noticed that I was having some hesitancy sometimes in getting in, and he pulled me aside. He goes, "Look, you just got out of that other trade. What was the last trade you were in? Okay, well, you managed that trade, right? Yeah. So you can manage risk, right? Well, yeah. So why are you afraid to get into the next trade? Well, I don't know. I mean, you've got to have confidence that everything's set up for you. All you have to do is follow the rules and follow what you're setting up for yourself and manage your risk. Manage the risk means adhere to the stop prices. It means following your own rules. Whatever you have to fall back on, you have to fall back on that. And the bottom line is you just got to make the trade, step up like a batter or a golfer, standing over a ball, gripping the club. I don't want to go left. I don't want to go right. What if I do this? What if I do that? You're never going to hit the ball. You need to just step up, press the button, set everything in motion, swing, and then manage. And know that you can manage. Because if you don't swing, you're going to be caught in analysis paralysis.
Absolutely, and it's just like, surfing or snowboarding or anything else. You've already learned how to do it. Then when you go play golf, there's no time to think. You just step up and you do, right? And if you hover over that ball and you grip too tight, things are going to go horribly wrong. Believe me, I can attest to that. So it's the same thing with trading. You come in with your methodology, and believe me, this is a methodology. It's not a system. Now, anything with certain parts to it, we could call it a system, right? But the methodology is seeing the action, looking at the footprints in the sand, and then putting those alerts in so that potential energy possibly might become kinetic, and we can capitalize on it, and that results in alpha. So, as Steve and I like to talk about, we've been, there's been whispers, there's been little whispers in the wind that say things are starting to change. Now, is it just a short-term consolidation before we move higher? Or, are we starting to see these short setups because we're first to the punch and we're very perceptive and we're using the technology to get little whiffs of change before the rest of the masses get it? A good example, and I shared this with quite a few people the other day. We've got some windows that can help you figure out what's going to happen when, say, for example, the SPY gets down to some pivotal levels, right? So there's little micro tells that we can get, like if you were watching this specific window as the SPY, bottomed out here, you would have had a pretty good indicator that we were done and we were going to bounce back up. Now, no way to tell that it was going to move this far back up, but you had a pretty good indicator that it was going to bounce a little bit and you were going to get something because of our advanced technology. So this is on the micro basis, but now we're starting to get these little tells on the macro basis. And Steve and I, with the webinars over the past 6 weeks, for the longest time, everybody remembers the trend change lubricants to the upside. I mean, they were all over the place, and we were loading up all kinds of windows with 6, 7, 8 at a time, and within a matter of 3 or 4 days, they'd all be, not all of them would be up, yeah, but cumulatively, we'd be up 3, 4, 5 points. We had some 8-point batches. ICPT was one of them, so that kicked in 30 points. But now, that well is starting to dry up. Now, of course, it's not that surprising, because we were doing this, just coming out of that bottom and rally, and now we're starting, markets getting a little schizophrenic. I'm going down, I'm going up, I'm going down, I'm going up. We're getting range bound. Everything looks like it's just settling into the range, and we're approaching the summer. Now, of course, I don't want to have a preconceived notion that we're going to be between these lines all summer, because you just don't know. All I know is that what I used to see all the time isn't there anymore, and what I used to never see is starting to show up. And Steve pegged a couple of these really good just in last night's Trade of the Week webinar. You want to go over a couple of those, Steve?
Well, those are the couple that I went through earlier this morning. Was Hain and JEC. I think there was another
Oh,
one that
right. I
was
didn't know if there
decent
was
on
any
there.
more that you wanted to touch base
I
on.
think I think there was one that was on there. Let me look at my price alerts here real quick. Hang on one second. I believe was it INN? It might have
Let's
been
take a look.
INN. I think I may have seen that one on there. No, it wasn't that one. That was another bearish engulfing. I'm sorry, I've got so many here that are starting to pop up on my screen. I can't recall which one it was.
Not an issue, and I kind of forgot we talked about those earlier, whereas we usually save those for the end, but we kind of snuck them in there early.
NRE, that was the one. Let's go ahead and look at NRE. It's everything that I talked about on the upside down. Nice sideways consolidation, nice tight range, but starting to roll over. And if you flip that chart upside down, that's very similar to the stuff we've been looking at on the upside, using the upside trend change lubricant for the green ones that are bouncing. So, you know, a lot more being served up in the red window now than the green window. And again, that's just a caution flag. There's no decision to be ultimately made on it, but it's yet another little piece of the pie that's making me see that, you know, things are not what they used to be. And I've been around so long to know that the people who don't recognize change are the ones that start to wither away. You've got to be open. You've got to be flexible. You've got to be able to evolve. I used a great example of a book I read called Hey, Who Moved My Cheese? It was written by the same guy that wrote The 1 Minute Manager. And it's about a 60 or 80-minute read. It's very short, very small, paperback book, but it's about two sets of mice. One set of mice kept getting their cheese at this one end of the maze, and they'd just wait there, and the cheese would come, and they'd get fat, and they were loving life. But one day the cheese stopped coming, and both of those mice took about a different approach on how to handle it. One guy said, no, I'm not going anywhere. The cheese is coming back. I know it. I know that the cheese is coming back. And the other one said, no, I got to go out and find the cheese. And guess which one didn't make it? You know. So it's a great parable to be translated into the mentality of a good trader. You just can't get locked up in your opinions. You have to have an open mind in every time frame of aspect, whether it's daily or hourly. You just got to have an open mind. You cannot marry yourself into the cement to a fault.
Right. So as we were looking at Holly's strategy page, which seems to have escaped me, once again, Holly on her trades was down $1.11 on her closeouts. However, if we add up the entire non-exit profit column, and by the way, are you still hearing me, Steve? Because my microphone went eerily quiet.
I hear you. I got you.
Okay, just making sure I didn't get nicks there. Okay, so non-exit profit, when we add all those guys up, $2.61 points in opportunity is what we could call this, right? So if you're actively using this methodology, you know, that we've been going over, then there was an additional 2.61 that you could have grabbed, you know, even though Holly on her closed trades down $1.11. So see, it really is the best of both worlds, because, you know, Holly goes before you, and you can participate immediately, or if she gets into a losing trade, check out that chart, see if there's a good entry, because whether or not she gets stopped out, that's timing. Sometimes the timing is off. Anybody that builds the perfect timing machine will get extremely wealthy, but it just does not exist, like the Holy Grail. It does not exist.
In the interest of keeping the content fresh for what people want, there are a few requests here. If you got a minute, why don't we pull up the trend change lubricant real quickly and show people again how the original one was configured, and then how we just simply flip it to create the flip version. I'll be happy to go through it here. On the configuration, there really is only 3 points to hit on. The first one is it's got to be up for the day, change from the close. You see a minimum 1%. All these stocks are up on the day, 1% minimum. But we've got 2 time layers in which we're working with here, position and range. 2 key words there, position and range. On the first position, we're using a year range, 52 weeks, and we have a maximum value of 35%. So in other words, it's capping the stocks out that are no more than 35% above their yearly low. Everything else that's within their yearly low or no more than 35% off of their yearly low will satisfy that filter. And then we overlay a second layer of position and range, which is the 20-day. And we're only looking back 20 days and using a minimum value of 99%. Another way to express that is these are stocks that are 1% away from making a new 20-day high. And there we start to get a lot of those trend change lubricant setups. In addition to that, we also sort the trend change lubricant using the short float value. And the short float value works very well with these types of setups because these are stocks that were beaten up and are now no longer paying dividends to the short sellers. They're creating higher highs and higher lows. So when we have a bunch of data in there, we can sort it, and then we start to see stocks like XUS Steel that showed up last March and just exploded and became the poster child of the trend change lubricant on the US Steel chart. And this is a great example of, currently this one is working. We had a lot more of these type of setups, but we only have one at the moment. So how do we take any stock window, top list, or alert and flip it upside down without trying to do mental gymnastics? Well, the system does it for you. You start by duplicating the source window. In this case, our source window is the trend change. Then we go into configure it, and it's just one simple button. It's a flip button, and it turns everything upside down that needs an inverse value. All of the volume filters will stay the same because those are going to be unchangeable. But all of a sudden, look, we have more food source showing up here in the downside than we do on the upside. So, people ask, why didn't we do this earlier? Because it didn't need to be done. The trend change lubricant to the upside was working, and it was working well. So why fix something that's not broken? But now we're getting into the winds of change where trend change is not really showing much. So it might make sense to flip over a duplicate window and start watching these from the downside. So that's the reason we did that, and I just noticed a few people had asked that as well. Would you email? And maybe Jamie would be kind enough to do the old cloud sharing link, and then we'll probably be butting up against the top of the hour. And while Jamie is copying to the cloud and dropping that into either the chat window or the questions box, actually works as well, either one of those, we're going to talk about Holly. And the AI is going to be a major shift coming up here. For those of you who have been thinking about making the premium leap to the advanced functionality, which again is the AI, the back testing, which Leon is so addicted to, and most importantly, the price alerts, which allows you to keep the methodology simple. The pricing is going to be changing. We don't know exactly the specific date, but you have a couple weeks still. And for those of you who are on the fence, thinking about locking Holly up for life, you got to put a ring on her finger because the lifetime license is going to be going away here real soon. And as soon as we have that date, we'll give that to you. But we're giving fair warning now that you guys are going to have a decision to make coming up that are thinking about that. So it looks like Jamie dropped in the cloud links into the chat window for both of those particular windows because that did seem to be something of interest coming through here on the question and answer window. Unless you got something else to say, Jamie, we're probably just about done, aren't we?
I think so. I think I've said it all today, and I hope it resonates with everybody. Just reiterating the simplicity of the methodology. If you have to take anything away from this session, it's just focusing on the simplicity of the methodology that we've developed. And I think that if you do it day in, day out, 2 or 3 months from now, you're going to have a whole different outlook on the market. So that's all I got today.
All right, sounds good. We can I can address Danny. Had a question about PC requirements and our pricing, since we're going to talk about the pricing in a few moments. Danny, Trade Ideas with the downloadable app is mostly thin client. All of the computing is mostly done on our servers, and so PC requirements are very low. You can run it on almost anything. And about rates raising, we only raised our rates once recently, really, and that was when we added charts. The other price that we've been adjusting since then has been the total cost for a combo package, buying everything at once. And it's actually a pertinent question because we're going to be coming up on another adjustment to the pricing. First, I'll talk about right now current pricing for Trade Ideas. And it'll be like this through the end of May and into early June. We are waiting on our development team to finish up making some changes to the subscription database so that we can have an adjustment to the way that we price the product, and I'll explain that on the next slide. But right now, this is still in effect. It's $99 a month or $888 a year. Obviously, $888 a year saves you a whole bunch over the $99 a month, and neither have a contract. It's just sign up for the month, and you can cancel at any time. Yearly, it's just year to year. Nothing locks you in. It includes all of your exchange fees, real-time data, the charting, and very importantly, also a full hour of training. So as soon as you sign up, go to the support section of our website, click on training, and then pick your preferred time and date with Jamie or with Steve, and they will give you a fantastic head start. Now, the AI to get Holly and the backtesting module, the odds maker, and the price limit alerts requires a one-time purchase. It's $1,100, and that it gets it to you for life. All you need to go along with that is either a monthly or an annual plan for the data. And the AI strategy odds maker license, again, it's lifetime. It's a one-time purchase at $1,100, and this is the change that's happening. So now what we're going to be moving into is actually something that's more simple to explain to new clients, but it ends up being more expensive in the long run for people who are using the premium product. So what we're going to be doing upcoming, and now's the time to go to the next one there, is we're going to just have a basic TI Core and a TI Premium. And the Premium will include the AI and the price alerts and the odds maker and all the high-end functionality that comes from those permissions. And the 99 and 888 for now will remain unchanged. So it's very simple, and if you want the odds maker and the AI, it's $188 a month or $1888 a year compared to $99 a month or $888 a year. And that's what we'll be moving into starting at the end of this month or the beginning of June. Existing subscribers who already have a subscription and want to pick up the AI, they're grandfathered in. So if you're already on for the year and after that point you want to pick up the AI odds maker, you can do that still for the $1,100. It'll be new people coming on that will no longer be able to access that. If they come on and want to subscribe for the year and get the AI, they will pay the $1888. So, but the good news is, if you look at your handouts panel on your GoToWebinar interface, you can download a PDF right now. And what that's going to do, it's going to have the same info that's on the next few slides, which includes a product code. And the code this week is Holly 11. Oh, let me get that question for Peter. Someone just pointed this out to me. Yeah, actually, Peter, maybe Steve can help you. I don't understand how that's phrased. So yeah, we have a code up on screen. It's Holly 11. That's good until the end of business on May 13th. It's capital HOLLY 11, and that takes half off your first month. So it's only $49 for your first month. There's really no excuse not to just give us a try at that, and especially because it includes access to most of the software and the full hour of training. You can pick up a year for just $710. You get 20% off the year using this code, or 30% off that lifetime AI odds maker license that's going away. And getting the yearly and the odds maker and the AI license together at that discount's a really smart thing to do, and we've made it easy for you to do. If you go to a page also available in your handout, it's bit.ly/AI Holly, and that's just a short link to get you there. And that takes you to a page where you can just click through to buy the whole bundle together, and when you apply that code, it takes over $500 off right away. So instead of $1988 for your first year and the lifetime AI license, it's only $1480, and then you renew it only $888 rather than the $1,888 that we're going to be charging annually for the odds maker, AI, and the TI. So thank you everyone for joining us. There will be a recording up later tonight, but they're going to get an automated email tomorrow with a link to the playlist, so you'll have that by then for sure. Thanks everyone for attending. Any questions, email us info@trade-ideas.com, and we'll be happy to help you out. Thanks everyone. Thank you, Steve. Thank you, Jamie.
Right on. We'll see you Monday.
Thanks everybody for coming, and have a great weekend.
All right. Thanks, guys. Bye.